Welcome to the Deep Dive, where we really try to pull out those key nuggets of knowledge from the week's biggest stories.
What to be diving in.
Today, we're digging into the top crypto and blockchain news from, let's see, September 1st to the 7th, 2025.
A busy week.
Definitely. Our mission, really, is to help you quickly get a handle on the crucial trends, those aha moments, and maybe the longer-term picture from a week that had some big shifts.
And some surprising divergences, too.
Exactly. And some, pretty wild stuff happening. We've got a bunch of sources here. And like you said, the first thing that jumps out is this split, this clear divergence between Bitcoin and Ethereum. But beyond that, we'll unpack some major moves in stablecoins, key layer 2 stuff, and even this new kind of intersection between politics and finance.
Which is something.
Right. So the goal is you walk away understanding not just what went down, but why it actually matters for the market and, for your own perspective.
Indeed. And I think what's interesting is that this isn't just like a standard news cycle. We're seeing some quite fundamental shifts, some strategic plays happening. Yeah, and they could really have long-term implications. It hints at, maybe, a market that's maturing in some ways, but still finding its feet in others.
Okay.
These stories, they all connect back to how digital assets are being used, how they're fitting into, or sometimes clashing with, the bigger financial world.
Okay, so let's jump right into that headline act then. The big divergence. Bitcoin versus Ethereum. It really does feel like a tale of two assets right now.
It does.
So on the one hand, you've got Bitcoin and its ETFs. Well, they've seen their 5th consecutive month of net outflows.
5 months.
5 months. That's not just a blip, is it? That feels like a real sustained trend.
It's structural at this point, you'd have to say.
And the price itself, well, it's been under pressure. Consistently trading below those key support levels, around $107,000, $188,000.
Right, struggling to hold that line.
And then, to make things maybe a bit worse, there were reports, pretty solid ones, of a single large whale selling off a big chunk 4,000 BTC.
Which is substantial.
Yeah. And apparently rotating that capital like directly into Ethereum.
Explicitly, yeah. The rotation is key there.
And this all happened when liquidity was maybe a bit thin, partly because of the U.S. Labor Day holiday, right? Which can always make these moves look bigger.
It amplifies things, definitely. Thin liquidity plus a large order equals bigger swings.
But what does it really mean, you think, when one big player can have such a visible impact like that? Is that fragility or just how markets work sometimes?
Well, it's a bit of both, maybe.
Yeah.
But I lean towards it being more than just market mechanics here. Yes, large trades move markets, especially thin ones.
Okay.
But that specific rotation out of Bitcoin into Ethereum, combined with those ongoing ETF outflows, it points to something deeper, I think.
Like what?
Like maybe a structural shift in how particularly institutional money views these assets. It feels like they're valuing Ethereum's programmability, its ecosystem potential.
Over Bitcoin's store of value narrative.
Potentially for future growth, yeah. It suggests a reevaluation is happening, looking more at utility maybe, and that kind of sets the stage perfectly for what Ethereum did this week.
Exactly. Because while Bitcoin was feeling the heat, Ethereum was... well, it was doing pretty much the opposite, wasn't it?
Holding up surprisingly well.
Yeah, even with the rest of the market seeing a correction, Ethereum's price showed real resilience. Technically, it forms that triple bottom pattern near $4,230.
Which is a classic technical sign, yeah.
Yeah.
Suggests strong support.
Right, like sellers are maybe getting tired, a bounce could be coming, it's a strong indicator. But here's the kicker, and this number is, frankly, huge.
The stablecoin.
Yeah, a record $172.2 billion in stablecoins now sitting on the Ethereum network.
Wow.
And get this, $6.7 billion of that flowed in just in the past week.
Just 1 week. That's incredible.
That's what people call dry powder, right? Capital is sitting there ready to be deployed. And that massively strengthens the bullish case for ETH and probably for all the DeFi stuff built on it too.
It really does. It's striking how often these stablecoin inflows come just before increased activity, especially in DeFi. It signals a high level of confidence, in Ethereum's utility, its future growth, even when the wider market's looking shaky.
Right.
This isn't just parked money, it feels like strategic positioning. Funds ready to jump in, fueling that whole ecosystem, DeFi, NFTs, dApps.
So that institutional preference we talked about, It's not just for ETH, the coin, but for the whole platform.
Precisely. It's the whole infrastructure. And stablecoins are a big part of the confidence in using that infrastructure.
Okay, so beyond the big two, though, things are always moving, aren't they? The landscape keeps evolving, new players, tech advancements.
Always something happening behind the scenes.
Let's look at some of those other key developments shaping things. It's not just about Bitcoin and Ethereum. The whole ecosystem is constantly shifting. First up, that intersection of TradFi and crypto seems to be getting deeper. Gemini, the exchange from the Winklevoss twins.
Right? The Facebook connection there?
Yeah, them.
Yeah.
They're reportedly aiming for a multi-billion-dollar valuation for a NASDAQ IPO.
That's ambitious.
It is. And it feels like more than just another company going public. It's a big test, really, for how traditional markets actually value these crypto-native businesses.
A bellwether, potentially?
Could be. If they succeed, maybe others follow.
Yeah, the big question is how integrated these crypto firms can actually become with traditional finance.
Yeah.
And what hurdles are still there, regulatory, operational.
Right.
A successful Gemini IPO could, open the floodgates. More crypto firms looking for that mainstream validation, that capital.
But it means more scrutiny too, right?
Oh, absolutely. Massive scrutiny. Tough regulatory demands, having to meet all those public market requirements. It's a tricky path, but maybe necessary for wider adoption.
Okay, shifting gears a bit. Network efficiency. TRON made a pretty big move this week.
The fee reduction.
Yeah, a whopping 60% cut in network fees. Their largest ever, apparently.
That's significant.
The idea is it'll make stablecoin transfers on TRON way cheaper. What's the strategy behind that, you think?
It's straight up competition, isn't it? Lowering fees is classic strategy 101 to grab users and volume.
Especially for something like stablecoins, where cost matters.
Exactly. Very cost-sensitive area. So it's a clear play to get more people using TRON, especially for maybe everyday type transactions, boosting their appeal against other blockchains.
The battle for market share continues.
Always. Everyone wants to be the cheapest, the fastest, the most efficient.
And speaking of efficiency, Ethereum's not standing still either. Vitalik, Buterin, and the foundation, they're still pushing hard on scaling.
LeanVM.
Yeah, that update. The LeanVM update reportedly improved recursion speed, lowered costs, which sounds pretty technical, but it's important for performance, right?
Absolutely crucial. These aren't just minor tweaks. Scalability has always been, one of Ethereum's biggest hurdles.
Right.
So continuous improvements like LeanVM are fundamental if it's going to handle mass adoption across all sorts of applications. DeFi, gaming, enterprise.
So these are the building blocks for that ecosystem growth we talked about.
Exactly. You need this foundation to support things like those huge stablecoin inflows.
Got it. And one more in this segment. Polymarket, the decentralized prediction market platform.
Yeah, interesting space.
They hit an all-time high for the number of markets created, and apparently they're looking to get back into the U.S. market.
Which would be huge for them. User base, volume.
It points to this growing interest in prediction markets generally, doesn't it? Even if they're sometimes a bit controversial.
Well, what's fascinating is they represent a really unique use case for blockchain, right?
Yeah.
Verifiable betting on real-world stuff, all on-chain.
Yeah.
Their growth, and especially if they do return to the U.S., shows there's a real appetite for these kinds of transparent, decentralized forecasting tools, pushing the boundaries a bit.
Okay, now for maybe the more surprising stuff, the wildcards of the week.
Always a few of those.
These stories really show how multifaceted, how unpredictable this whole space can be. Like anything can happen.
For sure.
First up, Tether, issuer of USDT, the biggest stablecoin. Reports are they're considering a large-scale investment in gold.
Gold. That's a traditional move.
Right. It signals maybe they're diversifying their reserves beyond just T-bills and cash equivalents.
Hedging, perhaps?
Could be. But what's the impact if a company the size of Tether starts buying up gold?
Well, that's the big question, isn't it? How stablecoin reserves evolve. Moving into gold, a classic safe haven asset, makes sense as a strategic hedge maybe against inflation or market chaos, but Tether is huge. An investment like that could genuinely ripple out way beyond crypto into global commodity markets, affecting gold's price, supply. It shows how connected these worlds are becoming.
Digital and traditional assets getting tangled up.
Increasingly so, and sometimes disruptively.
Okay, on a more difficult note, we saw the shutdown of Kinto.
Ah, yeah, the Layer 2 network.
Right, one of those Ethereum scaling solutions. It shut down after that $1.6 million exploit back in July.
A tough reminder.
Definitely. It really highlights that security is still a massive challenge in DeFi. even with all the innovation.
Paramount challenge.
And it makes you ask questions, doesn't it, about the viability, the security protocols of these smaller, maybe newer layer 2s, especially as the ecosystem gets more complex, more valuable, becomes a bigger target.
It's sobering, yeah. Even with all the tech progress, security is the ongoing battle. This Kinto situation is just a stark reminder of the risks in emerging DeFi. You need incredibly robust audits, constant vigilance, especially if you're a newer project in this space. It's that constant tension, right, between innovating fast and keeping users safe.
A balance that keeps getting tested.
Constantly.
Okay, and finally, the real wild card this week. A new crypto, the WLFI coin.
Ah, yes, the Trump associated with.
Reportedly associated with the Trump family, yeah. Started trading on major exchanges, Binance, OKX.
Quite the launch.
And it immediately drew, well, strong support from its community, but also a lot of criticism. Questions about potential conflicts of interest, between politics and finance.
Understandably.
Now, just to be clear, as always, we're just reporting what the sources say here, conveying the ideas. We're not endorsing any viewpoint, just highlighting this interesting development.
And it is interesting, if you connect it to the bigger picture, the rise of these politically linked meme coins, it really shines a light on that wild speculative intersection: celebrity, politics, DeFi.
Where narratives can drive huge value.
Exactly, sometimes completely detached from any underlying utility. It's a space where hype is king.
So what does it raise questions about?
Well, it raises questions about the blurring lines, doesn't it, between these different spheres, and maybe the potential for new ways to, financialize public figures or political movement. And maybe deeper questions, too, about the integrity and decentralization of crypto itself. Can something stay truly decentralized if its value is so tied to one person?
A test of core principles.
A fascinating, maybe slightly troubling test, yeah.
Wow. Okay, so wrapping this all up, what does it all mean? What a week.
Quite the mix.
Yeah, we've seen that clear split between Bitcoin and Ethereum, with big money seeming to favor ETH's ecosystem. We've seen the ongoing security headaches, these surprising crossovers with TradFi, even politics.
Maturation and chaos side by side.
That's a good way to put it. Growing maturity in some areas, integration happening, but also those persistent risks, the speculative, almost Wild West elements are still very much there.
Still defining the space.
So hopefully you listening have cut through some of that noise with us, gotten the essential insights, those nuggets of knowledge from the week's key crypto news.
It's a fast-moving landscape.
It really is. And understanding these trends, these shifts, it's pretty key to navigating it, right?
Absolutely. And maybe a final thought or a question for you to ponder.
Okay.
As these lines keep blurring between traditional finance, tech, politics, all in this crypto space, what new forms of value creation might we see coming? And, just as importantly, what new risks? Think about how all these pieces fit together. The whales move, the stablecoin surge, the L2 shutdown, even that meme coin launch.
They're all part of this bigger story.
Exactly. A complex, evolving story that is definitely far from over.
Great point. Well, thank you for joining us on this deep dive.
My pleasure.
We hope you'll keep exploring these topics, stay informed, as this fascinating world just keeps changing.